Hi, everyone. John Sweet here from Oak Leaf Wealth Management and 307 Financial. Welcome to another experiment. We are endeavoring to get as much interesting educational material out to clients as we possibly can. And if you recall my most recent quarterly update, I had mentioned that as I've been getting a lot of questions around AI, that I thought I would start another series specifically around questions around AI, framing AI. Today, I have a wonderful guest from JP Morgan. Stephanie Aliaga is a global strategist at JP Morgan, and she is on Bloomberg and CNBC frequently talking about AI. So this is a more volatile period as kind of disruptive technologies are known to create. The more information we have on what to expect, the more we will be prepared for it. So without any further ado, here's that interview. Well, Stephanie, thank you so much for coming on this podcast video to our clients here at 307 Financial and Oak Leaf Wealth Management. Um, as we chatted about last week, I've been consistently getting a ton of questions about AI and about the world and how it's changing. And from an economic point of view, the stuff that you and your team write about is outstanding. And so I'm really looking forward to hearing from you and getting getting every and all information about the space we can. Let's start off with the big picture in terms of how you and JP Morgan kind of see the AI occurrence, this disruptive technology. Is it as important as we're hearing and as we think?
I think absolutely. Um, and it's been almost 4 years since the launch of ChatGPT, and we've already gone through so many different waves of the AI capability frontier. We've continued to really push the bounds there. And we're clearly in the midst of a massive investment wave around AI. And it's one that we think has a lot of structural supports behind it. We don't think that we've really seen the middle, maybe not even the end of that just yet. So this concept of still being early innings, despite having already seen so much change, right, is something that markets have really struggled with, like grappling with. But I think what continues to give us a lot of confidence in this thing is just how much of this AI wave is powering earnings growth. And this is not just hopes and dreams. It's not us getting way ahead of ourselves and levering up in anticipation of AI demand. We've seen that happen before with transformative technologies. Today's, technology is fundamentally different in many ways because the demand is already taken off, and the technology may already be at a point where it is very economically useful. And so it's not just sowing the seeds for future rewards, but it's actually trying to catch up ahead of your competitors, right, so that you can begin to harness this technology.
That that's fascinating. I've been sharing something with clients. You and I chatted about this last week. This was last summer. A firm came out with a white paper that they said if AI was real, which we now know it is, it would probably add something like 5% to GDP on a yearly basis for 5 years. Not on a linear progression, but over 10 years, 5% a year. Is when you guys think economically about this in portfolios, uh, does that register? Does that sound right? Having extra, growth for a certain period of time, maybe it ebbs and flows, but is that something we would think might happen in the economy?
So, look, we do think that AI is going to be very constructive for the US economy, for the long term outlook. But we need to remember, what the economy is facing outside of AI, and then also what magnitude of an increase might we see because of AI. So, first, in terms of everything else going on in this economy, look, like the long term trend rate of growth for the US economy right now is estimated by most economists at about 1.8%. That's excluding really AI. That's just like our long run rate of growth. And what is challenging that even that 1.8% is the fact that on the demographic side, when it comes to the labor story, that picture is really dimming. And when we put together our forecast for the long term, we see a US economy that essentially sees flat or no growth in employment because of aging demographics primarily, but also the fact that this is not an economy that is as open border when it comes to immigration as we might have been in the past. So those two things, those have serious pressures on the economy. Now, what is AI going to do? Well, AI is finally giving us a reason for optimism on the productivity front. Now, in the decade before the pandemic, labor force productivity averaged about 0.9%. And what we have seen just in the last few years is a 2+% annual growth rate in productivity. And we don't even think that's AI just yet. So we could absolutely, we do anticipate to see a bit of a boom when it comes to productivity because of AI. AI helping us all not only be more productive at work, giving us much more efficient capital and technology that we can all use. Now, what is that going to ultimately amount to in terms of total output? It's a still very nebulous concept. I think if you have, for instance, people have been talking a lot about what AI is going to do to workers. And if we did have a surge in layoffs because of AI, that would be very bearish for economic growth because this economy still depends, like 60% of it is consumption, right? So if everyone loses their job, like that's not really great for the economy. Now, that's not our base case. We do think that full employment is going to remain in case, and so we could see a few years of 3% GDP growth, which we think would be very bullish, right? And that's something that even if the economy only grows by 3-ish%, which is actually quite bullish, that doesn't mean that earnings won't grow a lot more than that. And in fact, that's what we're seeing right now. The fact that this is an economy that's facing a very significant geopolitical shock that we're still clearly in the middle of, and yet earnings expectations for the S&P year to date have moved higher, not lower, from 15% in terms of 2026 full year consensus at the end of last year to now 21%. And that is all really a reflection of AI demand and all the investment underway.
So that's interesting. You're really painting a picture. I mean, if you go and I've done a little reading from economists who kind of specialize in disruptive periods, and it's kind of the hallmark seems to be the boom bust cycle where there's a lot of investment to get the new technology up and running, and the companies that actually win aren't necessarily the ones who started it. What is that something from an investor's point of view? Obviously, we can talk about what kind of technologies you might see coming, but would you say that there is that threat? There's more of a period of more volatility that we would expect, or is that not necessarily the case?
I do think we are in a market that is facing acute concentration. We've always had, the top leaders in the market, right? What is unique about where we are today is that the top leaders in the market account for just so much more of overall market cap than what we've seen historically. So there's just a lot riding on the success of a few companies. The good news is those few companies are some of the most profitable, have some of the strongest balance sheets that we have ever seen before in markets, right? So they are mighty for a variety of reasons. But you raise a really good point that look, long term, there's a lot of uncertainty around what the economics of data centers, of AI services are going to ultimately mature into. But what we can anchor on right now is at least the picture that is unfolding right in front of us. And that is a picture of rapid growth in cloud service revenues. You have last quarter for all the hyperscalers, it was up 37%. And we've had a few of them report earnings already. And they're also suggesting, look, revenues would be a lot higher today if they had the capacity to service it. So this is still an investment boom that is seems very well justified in terms of the demand they're responding to today and the demand they can reasonably prepare for in the next year or two because of how fast AI is growing and how quickly AI services are gaining popularity. So I think those things can give us some ease, but the challenge for investors is, look, if AI is going to be very transformative, and we expect it will be, you better bet there will be some evolution in market leadership. And so you don't want all your money on one individual horse or even any three horses. You want to make sure that you have some of that diversification to the value chain as a whole, because what we're seeing this year is markets are strongly preferring not the biggest spenders, but actually the biggest beneficiaries of all of that spend, which is a far more diffuse basket of companies globally and across the AI value chain.
Fascinating. And when you all look out at the new technologies and the new AI technologies, what are the technologies that get you the most excited? Maybe long term. Um,
Oh, well, personally, I'm just like a really big nerd in all of the like longevity science and health and wellness and biohacking. And I feel like it's crazy what we're going to be able to do in that front with AI. I mean, anyone that has a wearable, right? The amount of data that we have around our health is one of the biggest data mines in our world today, and we've really lacked the intelligence of how to make sense of all of that. So I'm really excited about what we're going to be able to do on that frontier. Also, what we're able to do in terms of innovation itself, like accelerating the rate of drug development, the rate of just truncating R&D cycles, right? And the ability to run trials and experiments in simulations through AI many, many, many times before you actually invest in the real experiment. Like there's just so many different examples of ways that we're not only going to be having better tools at our disposal, but also just better information that informs where we do spend some of these resources and expertise. So I'm really excited about what we're going to see on that front. And look, healthcare as a sector has really lagged the broad market. I don't know if I can say this quarter or next quarter is going to be the year that everything changes, but I think over the medium to long term, we are very constructive on that, because also, like, we have an aging population, and we're going to be trying to do more from our workers and also extend our lifespans and longevity. And that's going to be a really big focus, I think, for AI and consumers more broadly over the coming years.
it does feel like we've turned a corner in the last 3 or 4 months. That I heard something at I can't remember where this was disclosed, but somebody came out of a meeting with Anthropic, and they were expecting something like 70 to 100 billion dollars of revenue in a very short period of time, like by the end of this year or whatnot. Um, there are people out there who are saying, as a matter of fact, you wrote a really interesting research note on the idea that power is starting to become an issue, and that we might not be able to turn everything on. Is that one of those things that might kind of slow things down a little bit, or kind of take a little sheen off of things temporarily?
Yeah, I think this is really important. I get this question asked every time. Look, there are several key bottlenecks when it comes to AI, because the demand curve is like essentially vertical right now, which is kind of mind-boggling, right? But clearly, we cannot move that quickly when it comes to our electricity grid. And I think the challenge is we're going to be operating in a market that is very supply constrained for some time. So it's not that we're going to run out of power or run out of compute, but it's that the market for AI is going to reflect one that is supply constrained. So what does that mean? Well, that means if you are a company that can sell into this market where demand is vastly outstripping supply, you're going to be very well positioned. So the companies across the grid that are trying to bring new power online, right? Or companies that are trying to make us more efficient at how we utilize our power, storing renewable power better, right? We think about battery technologies, but also more efficient equipment in these servers, and how we can cool down these servers, right? Cooling technology. So there's just so many different examples of companies related to this build out, either trying to supply capacity or to make our operations a lot more efficient so we don't need as much of that. And those companies are going to be very well positioned, we think, for probably the next number of years. The other consequence here is that if you are in the market of selling AI services, well, you want to be very smart about the price that you pay for those services, the compute, right? Any deals, any long-term agreements that you can lock into. So that's why we're seeing all of these partnerships emerge, right? Hyperscalers are realizing their ability to service demand in 2030 could be inextricably linked to the work that they do right now to secure capacity in that time frame. So that's why you're seeing all of that rush. And then the other thing that we're beginning to see is for use cases of AI that are not very economically important, they're going to be de-emphasized. OpenAI recently shut off its Sora program, which is essentially the application that enabled consumers to build AI generated videos like the kind you can scroll on TikTok, but fully AI generated, right? They completely cut that program. It surprised many, but their reasoning was this is not a very good use of compute up which is scarce. And the other thing that we may see is a lot of the subsidies that are currently being offered because we're still trying to get people on board and using AI, those subsidies could be pretty short lived. I asked Claude the other day, I use Claude a lot, like my personal subscription to help me research things on the side. And I asked it to estimate what my token consumption would have cost if I was a business paying the API price from January to March. And they estimated it would have cost $3,000. Now I paid a monthly subscription cost of $100 a month. So consumers very subsidized right now, but I wonder, how long those subsidies are going to last if we're in a supply constrained environment. So those are some of the ways that I think investors should be really mindful of that dynamic.
Fascinating, interesting. Well, this has been super helpful. I guess I will end with anecdote. When I think about AI and I think about the opportunities, and the healthcare, I do wear a wearable which has really helped. But I recently took a ride in an automated car, and the idea of a frontier, AI. When you think about going to Claude and going up to the cloud and getting answers, you think of that as AI, but that AI is going to arrive at our doorstep in the not too distant future, maybe through iPhones or other things. I think is an interesting opportunity as well. And so, lastly, you'd mentioned the idea that, yeah, we're kind of looking out and monitoring layoffs or a change in employment. How do you, in general, there is this argument that I hear a lot of the people who are very pro AI talk about. We were worried about radiologists being out of business 15 years ago because of AI reading scans, but now, because we do so many of them and scans have to be they have to be authorized by radiologists. We actually have a shortage of radiologists. Do you believe does your team think that is the ultimate outcome, that there will be new occupations and new things developed, um, or is there also likely to be times where, yeah, certain industries do very quickly get changed?
Yeah, I do think we are in the midst of what will probably be the most rapid evolution in jobs that we've ever seen. But evolution does not mean mass displacement, mass layoffs. And I think even in some of the jobs and sectors that are most AI exposed, radiologists were a great example of AIs coming for your jobs. And right now you're seeing this with software engineers, right? But the data show, I mean, there's still plenty of hiring going on for software engineers, but they're being hired for different things. I mean, if you're a software engineer today and you're not using AI tools, I mean, what are you doing, right? Like you're going to be not very attractive in the job market today when clearly the way that we're creating, writing, modernizing code has evolved so much. And the latest term is not really software engineer, but AI forward deployment engineer. We need humans to help orchestrate swarms of agents and You're seeing that's driving labor demand, but like a different kind of job. And so I think we're going to see a lot of evolution. And look, if you as a worker cannot adapt, I think there's going to be, a challenge there. But when we think bigger picture here, really humans are just have such a good do such a good job at finding things to do. Maybe, we apply ourselves in different ways than what we've done historically. I absolutely think we will. But what gives me encouragement is when you look at a lot of the surveys of what is happening to workers today across professional services, white collar workers, when you give them these tools, what happens is they find themselves significantly busier because AI has just given every worker this incredible toolkit to achieve things they wouldn't have been able to achieve before, to take on projects they wouldn't have been able to do before. It is going to raise the bar for quality and the kind of output and everything that you put out there. But workers are stepping up to the challenge in many of these companies, and they're finding a lot more enjoyment in it too. So, we're still in some very early innings of what this is going to look like. And I think, I'm an optimist by nature, but I think we're going to see a lot of evolution, but I hope it's for the better.
Well, that's a great place to end. Thank you, Stephanie, so much for taking some time out of your day to. I know you have to rush to down to the stock exchange, but thank you so much. We really appreciate it, and I hope you have a great day.
Thank you so much.
Take care.